View for June 18th, 2024. July 18th, 2024. Beginning of the day, I thought it was pretty important that we were in this trading range from yesterday. Basically, the market opened at the top of the trading range. You can see we went back into it on bar one. Just turn the study on. So I thought it was pretty important that we had been in a trading range for basically the past, 40, 41 bars, and we were still opening within that trading range. Whenever the market is within a trading range on the open, so it's, still within yesterday's trading range, you should be expecting some sort of breakout mode pattern on the open. So you can see it was an expanding triangle open. And I think we had one of those the prior day as well, or earlier on the week. No, I don't see it. All right. Maybe I was making things up. But we had an expanding triangle open, which is a breakout mode pattern as well. So bar one, a bear bar closing near its low, but probably not going that much lower. I'd imagine there's probably buyers not too far below, and it's still within the trading range. So there's probably sellers not too far above. You can see the tail broke out of the top of the trading range and then reversed back into it. So it is a failed breakout above the trading range. We're probably not going very much higher without at least a pullback. Bar two, a bull bar closing somewhat near its high, but there's a tail on the top, which is disappointing. It did close above the highs of all of these bars, yes, but bar one is your signal bar, so it's not very good. You should probably be waiting for consecutive bull bars before doing anything. And there's still a tail on the top of bar two, so it's not quite as good as it could be. Bar three is actually, I think, a little bit disappointing if you're a bear. The bears wanted bar three to be an inside bar, closing somewhat near its low, maybe half the size of this bar. And then they were, it would have been reasonable to take a chance and sell the bar, thinking that, well, worst case scenario, we're towards the top of the trading range, and we get down here, and best case scenario, I've picked the high of the day correctly. But instead, bar three got really big, and when the bars get big and it triggers below bar two, I think that's disappointing for the bears because now bar three is the entry bar and bar two was their sell signal bar. So it might have been better for the Bears had bar three remained an inside bar. And I think it's one of the reasons you get disappointing follow through on bar four is traders, yes, micro double top 1-3, but they wanted to see bar four, or they wanted to see bar three be smaller. And when it wasn't, traders are less willing to sell below the bar because they know there's probably buyers around the moving average. So traders don't take the short. Instead, this is what happens. You get a disappointing bar on bar four. Probably sellers not too far above bar four. It's a high two on the open for the bulls, high one, pullback, high two, but it's really not very good. It's a doji bar, and it's a reversal up from the moving average, but you're still towards the top of this trading range. You got to keep that in mind. This has been a trading range open. This is not a strong breakout for the bulls. Therefore, it leads me to believe since we are still within this range, this whole thing is becoming one trading range. So I'm not really all that eager to buy up here. Bar five, disappointing follow through for the bulls. Not all that surprising. Bears are hoping bar three was their breakout, and this is a pullback, and that they have a low one short. And the bulls are hoping that the gap up was a strong, strong bull breakout, and then we got a pullback, and then second leg up for the bulls. Or you could argue that this is a two-legged correction. So they want the high two to work, essentially thinking gap up is the start of the bull trend, and then we have a high two. Bar six is a good bar for the bulls. It's a bull surprise. It's notable that it got so big, but it was never quite able to close above bar two high. So had bar six gotten a little bit bigger and closed, basically one tick above the high of the bar, above the bar two high, then it would have been a more bullish breakout because it would have broken above the trading range and been a bull surprise. Instead, it was just a bull surprise. It's still good for the bulls, and you can still take a chance. I don't know, maybe 40% chance that we have seen the high of the day, or sorry, that we have seen the low of the day on bar six. And if you're buying, where are you hoping to get to? Well, you could argue that the top of the bear channel. So we had the spike down, bar six, bar seven, bar eight on this day, on Wednesday, and then a pullback and then a channel. So it was a spike pullback channel. Whenever you get a spike pullback channel, the top of the channel is going to be a target. So you could argue that the top of the channel, bar 10 close, is the first target for the bulls. I also thought, if we went further up, the bar five close would be a target. And those were the two, main targets for the bulls. But you could take a chance and buy and basically just see what happens if it ends up being towards the low of the day and you start to get a rally. Bar seven, follow through for the bulls. It's good for the bulls that they got bull follow through and it closes above the bar two high, which is important because that's a breakup point. But it's not a great bar for the bulls. They wanted to see another really strong looking bull bar. We're probably still going higher, and it is consecutive bull bars closing near their highs. So we are always in long, but kind of a disappointing that it wasn't able to look a little bit more like bar six. It is notable that there's an open gap between the bar five low and the bar seven high. Or sorry, bar five high and the bar seven low. You can see right here. So that's a gap for the bear or for the bulls, and increasing the chances that the bears who sold above bar six or above bar five are going to end up getting trapped. Bar eight, three consecutive bull bars. Bar eight is much smaller. I think bar six are obviously much smaller than bar six. It is three straight bull bars, so bulls are hoping, maybe 60% chance that they get the measure move up. But the energy is not all that strong for the bulls. They were hoping that we would go up further, faster. Instead, you get a disappointing follow through bar on bar nine. So when you see bar nine, if you're a bull, do you exit below nine? Well, you know that you're probably going to pull back. You might exit below nine, but you can see we never traded below bar nine. So bulls, they bought the close of bar nine, and that's causing the rally on bar 10. So if you're a bull and you bought for any reason, what you're hoping is that, this is a first reversal down, yeah, but you're hoping against the second reversal down. And as the market is rallying, if you're a bull, you have two options. You can take a chance and see if the bulls end up buying up here and we get a close up here and we start some sort of bull trend. Or if the bulls, or you can sell out of your long up in this area and potentially join the other bulls who are selling out of their longs. In this case, that's what happened. But a lot of times the bulls who sell out of their longs up here will get trapped out because the bar will continue to grow. They'll think, oh no, I just sold out of my long where other bulls were buying, and they'll have to buy back, or they'll have to buy back their long, and that can cause more buying. So it's really, you can exit up here on the bounce during 10 because you're disappointed in 9, but you don't really have to. You can just wait and see what happens. And then bar 10 closing near its low. I think you probably just get out below bar 10. It's a pretty disappointing bar. I think if you were long, you wanted to see bar 10 be a bull bar closing near its high. And instead, it's forming a micro double top, and it's a second reversal down. 9 is the first reversal, and then we rallied on 10, and then you have a second reversal down. So I see 10 as the second reversal down, and basically a spot for bulls to exit. You don't really, you don't have to sell it. This is pretty strong, so you know that the first reversal down is probably going to be bull. I say it's a second reversal down. It's a small. I think it's enough for bears or bulls to exit. Probably not quite enough for bears to short, because this is going to get a second leg sideways to up. And this could have been the second leg sideways to up. The tail on 10 might be, but it's really just not all that strong. I think we might try to get a little bit more. 11, a bull bar closing near its high. I assume it pulled back to around 50%. So in that general area, the 50% area, and we got a reversal up on 11. A bull bar closing near its high. It's a high one for the bulls. Is it worth buying? I don't know. I think that the consecutive bear bars are a bit of a problem. If you're going to take a buy like 11, you probably have to put a stop below bar 4 and then just sit and see what happens. But you see, you never get triggered on bar 12. So instead, bar 12, a bear bar closing near its low. You can sell 12 and take a chance. We've seen the high of the day. I think that's a credible thing to do. If you do that, like I said, there's not really a better case scenario than bar 13 for you if you do that. But yeah, it's reasonable to take a chance. We've seen the high of the day. You also have this gap that's open. And if you're a bear, you could be thinking, well, we probably should fill in this gap because it's not all that strong. This doesn't look like a bull trend anymore. This, it had potential to be a bull trend, but it's looking disappointing instead. And so it's probably going to be a trading range. And if it's a trading range, we're probably going to close that gap. So you'd imagine we're going to get back to at least the bar 5 high. And you can see as 13 sold off, we got back to the bar 5 high pretty quickly, and then we crashed right through it and got a huge bear bar closing near its low on bar 13. Bar 13, major bear surprise. Yeah, possible that within the day we're forming an expanding triangle, but like I said, I mentioned there ended up being a larger one, which hard to see in real time, but nothing to do here except for sell. The problem with selling 13 is it's so big, and the risk is huge, and it might be a trading range open still, but this is strong enough to undo all of this, and this looks like a failed breakout of this. So I don't know. It's possible, reasonable chance that we get a measure move down the whole trading range, maybe somewhere down here. So anyways, The question is, when you see bar 13, you see we break out strongly below the low of the day. And to me, I was wondering if we were going to get back to the breakout point, the bar 4 low, since we broke out so strongly below it on 13. I was wondering if bulls were going to end up getting trapped. You can see they did not get trapped. They had a chance to get out on 18. But Brad has talked about before, you should look at how easy was it for traders to get out, because you had one chance during bar 18 to get out. If you bought below 4, you had one chance to scale in and exit your longs, but only one chance though, because if you didn't take this and you instead, kind of thought about it and gave the market another minute, you were now trapped. There was nothing you could have done, and it only overlapped by one tick. So you had only one chance to get out, which is not usually as strong of a sign of bullishness as it could be if you had had a couple of chances to get out. 14, follow through for the bears, but it's, there's a tail and it's a shrinking body. You can still sell. 12, 13, 14 are really strong, and you're going to get a second leg sideways to down. So it's definitely okay to be short, but I'm not sure how much further down we're going to go without a pullback. More follow through on 15, and you can see big tail on bar 15. So disappointing that bears are starting to take some profits. What are the magnets? 5,600 is a big round number, and so I think that's going to be important later today if we start to get there, but I don't think we're getting there without a pullback. But the bears can sell and take a chance that we sell off to around this area, around 5,600. 16, a reversal up. Traded below 15, so it's not an inside bar. It's a micro double bottom with 15. It's a bit, it's a minor reversal up. It's going to be a minor reversal up. Do you exit shorts above it? You probably can. Do you buy above it? Well, it would be a scalp if you did take the buy, I think. You would be buying, taking a chance we get a quick bounce back up to the bar 4 low. So if you're buying here, you're probably just looking for like 10 points or something. And, you got it pretty quickly on bar 16. But this is not, if you took this trade and you exited below 18, you probably weren't thinking about the trade the right way. You probably should have just bought and either taken 10 points or exited around the 4 or at the bar 4 low during bar 18. I think those were your options if you took the trade on 16. If you were buying it hoping it was the low of the day, I think it's a bit ambitious because 12, 13, 14, 15 is pretty strong, and so I'm not sure we're going that much higher without a deep pullback. Additionally, bears are going to sell around a 50% pullback of the whole thing. So you can imagine there's probably going to be sellers somewhere up here around 10 points and around this low. So there's a lot of resistance in that area. You can see, I think 17 is just bears buying back shorts, and that causes a big bounce back up to around the bar 4 low. We hadn't quite gotten there yet, but we're very close. We definitely should. At this point in the day, I thought 16, 17 strong enough for a second leg sideways to up. This is definitely strong enough for a second leg sideways to down, and this is obviously much stronger than this. But I did think we would go more sideways here rather than just straight down with the second leg. I was surprised at how quickly we went down. 18, a bear bar closing not quite near its low, but low enough that it's closing below its midpoint. That we're probably still always we are still always in short from 12 through 15. 16 and 17 is not enough for me to think that the market is flipped to always in long. So I think this is enough for traders to think that the market is always in short. And we are always in short, and we get a bear bar closing near its low, a strong reversal down from the moving average. It's really only okay to sell low ones if you're selling them in the spike phase of the bear trend. And this is the low one in the spike phase of the bear trend. And it's a strong reversal down from the moving average. It's important that we were never able to get a close above the moving average. We were only able to briefly test it, which makes this, I think, a little bit more bearish and traders more willing to sell below bar 18, 19, etc. 19, follow through for the bears. It's consecutive bear bars, but it closes above the 18 low. It's not as strong as it could be. The bears are hoping to start to get really strong follow through here pretty soon. And you do get a really good looking bear bar on bar 20. Had we gotten the second reversal up, I think a lot of bears would have given up and we would start to go more sideways here rather than down and form some sort of trading range day. But instead, you get a big bear bar closing near its low on 20. What do the bulls want? Well, the bulls want another reversal up and a big high too, but it might be a bear trend. You would need a pretty good looking bull bar here, basically, something like 16 with maybe a slightly larger body as a reverse. If the body of 16, let's say, was this big, and you took that bar and you put it as a reversal up on 21, I think that would be an okay buy, looking, for a bounce. But this is pretty strong and this is pretty strong. So any reversal up is still probably going to be minor. But a lot of bears will sell below 20, taking a chance that we get a collapse below. And if we get a reversal up, then they'll just exit above the bar. More follow through on 21. So consecutive bull bars, 20, 21. We're probably going at least a little bit lower. I'm not sure how much lower, but this is, again, this is really strong. This is really strong. There's no bottom in sight. So keep selling. 22, it's more follow through, but a shrinking body. There is a big tail on the top, which a lot of times, the same way, you can get like bar 7. This could be the start of the channel. To me, I see 22, and I think, well, it's still the spike, but it could be, the start of some sort of channel on a lower time frame. So it really just, you can take it, you think of it that way, or you can just think of it as it's a smaller body. The momentum in the market is slowing, so we might start to go more sideways soon. 23, more follow through, so more consecutive bear bars. 18 through 23, we have 5, 6 straight bear bars. We're probably going at least a little bit lower here. 24, more follow through, so 3 straight bear bars. Hills on all the tops, yeah, but again, I still think we're going lower. 25, more bear bars. This is obviously very climactic. And, when you see 25, it reaches the magnet of 5,600, which was, I think, the big round number that we were looking for. And you can see bears buy back shorts. And that's what causes 26, because there's going to be traders who are wanting to take profits at the big round number, since those are always magnets. 27, a low one short for the bears. Are you selling below 27? I mean, theoretically, you probably can, but I don't know. I just think this is all really overdone. And if you didn't sell anywhere in here, I'd probably rather wait. If you do sell 27, it might be more of a scalp, because generally, if you're in, something that spike that's like this strong in either direction, and you get some sort of low one that's very late in the trend, you probably want to just take a scalp if you can get it. And bears were able to make a pretty quick scalp on bar 28. It seems like a lot of them used it and they bought back shorts, and that's what caused 29. Reversal attempt up, but still a big tail, so not worth buying. We're still always in short. We'll probably remain always in short for a little bit, but disappointing, I think, for the bears. We're probably going to start to go sideways soon. You know that the 27 high is going to be a possible magnet. And at this point in the day, I noticed, I was still thinking about the fact that the bulls who bought below bar 4 and they scaled in, they made money. So I was still wondering if the bulls who bought below 16 and had been scaling in were going to make money. I wasn't going to, just buy the market, but I was looking for some sort of credible reversal up, thinking we might have to rally back up to the bar 16 low. 26, a tail on the top. You can see we rallied above. It's a bad buy above bar 26, like I said, so you'd expect the sellers above, but I'm on bar 28. Anyways, 28, a big bear bar, closing near its low. But you're selling so low in this bear trend, it's probably not worth it. Like I mentioned, 29, and then an inside bar 30. So II 29.30, probably going to start to go more sideways here. IIs often are final flags, especially when you're deep in a bear trend like this. So does that necessarily mean we're going to go, way up? No, it just means we're probably going to start to go sideways up for a couple, an hour or two, and then traders can potentially look for a reversal back down. 31, you can see not really worth selling below 30 since it's an II. Oftentimes, when you get a final flag, traders look for a failed breakup below the final flag and then a reversal up. We do get a reversal up on 32, but I think the channel down is too tight to buy just yet. I want to see another reversal up. However, 32 is a really big bull bar, and it looks pretty strong. So to me, this is probably the end of the selling. I'm not really willing to sell after this. I'd rather look for another bull bar closing near its high and a second reversal up to buy. 33, an inside bar, a low one, but I probably wouldn't sell it. We didn't trigger above 32. And sometimes when you have a really big, somewhat credible looking bar and it doesn't trigger below, or it doesn't trigger above, you'll get a collapse below. But I don't think that's going to happen here. I think that, the bulls have done enough to make me think that this is a trading range. Buyers below 33 during 34. You can see probably buyers below 32. The traders who are buying below 32 are expecting to be able to scale in and make money. Disappointing follow through on 35. It's an outside bar, but tail on the bottom, tail on the top. So really not all that good. 3 straight bear bars, yeah, but possibly some sort of wedge channel, 28, 31, 35, something like this. Again, after bar 32, I'm not really willing to sell in general, and these are not convincing me otherwise. This is what, the strong kind of bars that you need to make traders sell low and at the market, and you're just not getting that over here. 36, disappointing. Some bears buying back shorts. Do you buy above 36? I don't know. Maybe you can. You're hoping to get to the moving average. I would rather personally wait for the strong bull bar closing near its high. The reason being, I thought we were going to get back to the 16 low, or at least try to. So I wanted to see a good bull bar closing near its high and then look to buy that. And that's what you get on 37. So I bought, or I thought it was okay to buy 37, thinking we were going to get up here and just wait for a second reversal against you. If you're buying the close at 37, you got to realize that, this was pretty steep. And so you're not going to go straight up. So you have to be willing to sit through at least one reversal against you, knowing that we're probably going to get, this is going to be strong enough for a second leg up. 38, a bull bar, closing near its high, but not above the moving average, which is disappointing. If you're a bull, ideally, this would have been better follow through and closed above the moving average, and we wouldn't, get a vacuum test. But that's not all that likely. We're probably going to have to go a little more sideways first. 39, a doji bar. It's really not all that good. To me, again, I think, if you took the trade, you probably knew it wasn't going to go straight up. You haven't really been able to make very much money yet, so nothing worth scalping out of. Probably okay to just sit in the trade. We're probably always in long. I would say 37 made the market always in long for at least a couple legs sideways to up. The reason that 37 made the market always in long, I think, is because 32 was so strong. So traders were expecting a reversal up, and then they got it 37, and the final bears are going to exit. 40, a bear bar closing near its low. The bears, they want trend resumption down, but I don't think we've gone up enough for the bears to get trend resumption down. I think this is a minor reversal at best for the bears. And if you notice how strong bar 32 is and how strong bar 37 and 38 are, not, just the strong close on 38, not necessarily how big the bar was, but especially 32 and 37, how big those bars were. We're probably going to go at least a little bit higher. But imagine at least to the bar 27 high. You could argue that that's the start of that channel, and we're probably going to test the high because this is a sell climax 27, 28. So the most recent sell climax high is always going to be magnet. 40, a bear bar closing near its low, but it's really not worth selling. Like I said, minor reversal best. Disappointment on 41. So the bears who sold, for any reason are disappointed that 41 was a bull bar. Bulls know this is probably going to get a second leg sideways to up, and they know that 41 is disappointing for the bears. So what do the bears do? They use the small tail, very small tail on 42 to buy back their shorts around break even if they can, and if they don't, they get trapped in on 42, a bull bar closing near its high. Now I think if you're a bull, you've sat through one reversal down. So you're probably at this point hoping, we can still go a little more sideways stuff, but you're hoping for no big bear bar closing near its low against you. And unfortunately, that is what you get on 43. It's possibly some sort of wedge, 32, 38, and 43. So probably just makes sense to get out of your longs here. Do you sell? I don't know. The channel up's pretty tight. These are all pretty strong. I think if you're selling, it's for a scalp, probably to the most recent buy climax low, the 42 low. So you make, basically a 5-point scalp. So I don't really see a reason to do that. Probably better just to sit and wait. You do get follow through on 44, but again, probably buyers below the most recent buy climax low. 42, 44 are sorry, what was I going to say? 42 and 44 for me is big up, big down. So big confusion is likely. So I think that we're probably going to end up going sideways more than anything. Bull bar closing near its high at 45. We're probably going at least a little bit higher. But the question is, the 16 low, I think that's the target for the bulls. So are we going to get back to that? Or are we going to reverse back down and get trend resumption to the downside? So 45, a good chance for the bulls to get a breakout above that wedge that I had drawn and try to get a reversal back up to the bar 16 low. But we'll see what happens. And 46, not really ideal follow through. One of the reasons is the risk has gotten too big, right? If you were buying over here, you could put your stop here at the lowest and you're risking 15 points, try and make 18 points. So I thought there was a reasonable enough chance that we get there before we get here. So it was probably okay to do. But now if you're buying 45, you're risking 11 points. You're trying to make 11 points, you're risking 11 points. So you probably need to have, still a 60% chance of getting here. And I'm not so sure that it's quite that high. So that's one of the reasons you get a little bit of disappointing follow through on 46. Even if it is 60%, it's probably not more than that. So I thought this was a better buy, taking the chance. And, you're probably not going to get a giant bear bar closing near its low here. That's another thing is your stop can be wide, but you're probably never letting this stop get hit if you buy here. If you buy here, it's kind of possible that this stop gets hit, or at least it gets close and you get something really disappointing. So traders are less eager to buy up here, I think, on 46. 47 is a little bit disappointing. There will probably be buyers below 47 since we have 45, 46, 47, 3 straight bull bars. However, However, if you're a bull and you were buying up here, you probably just wanted the market to go pretty straight up after 46. You kind of wanted a vacuum test of the bar 16 low, and it doesn't seem like you're getting it. So to me, this is a little bit, this is a little bit disappointing. You can see a lot of traders, more willing to buy pullbacks at this point. That's why you have buyers below 47 on 48. And we're probably going to get a second leg sideways to up from how strong these are, pretty likely, but I don't know how much higher we're going to go. You can see there are buyers below 47 during 48. It's a bad, low three short for the bears. Second leg sideways to up on 49. So hail 49 because why? Bulls bought below, they scaled in lower, and they used the reversal up 49 to sell out of their longs instead of buying more and betting on the vacuum test. Why didn't they buy more and bet on the vacuum test? Well, I thought if we were going to get a quick test up, it was probably going to happen right in here. And instead, you get a reversal down 49. So I thought 49 was really disappointing for the bulls because, now even if you get a good looking bull bar on 50, traders are going to be uncertain because we've had a couple attempts to try to go up here, and why aren't we doing it? And then you get another disappointing bar on 50, a doji bar. So we have consecutive doji bars. Another doji bar 51. So we have three straight doji bars here. It's probably some sort of tight trading range, and tight trading range are often final flags. So it's very possible we're getting a final flag here for the bulls because they were hoping, again, that this reversal up was going to do more, but it's really not. This is the evidence that it's not doing what it needs to do. So we might end up getting trend resumption down. 52, basically the last attempt by the bulls. It's, you could argue it's some sort of high two, high 148, new high here, high 148, high 251. But really it's just, dojis in a trading range. So it's not worth doing anything. It's better to wait for the breakout. 52, not really worth doing anything. And then 53, a bear bar closing near its low. When you get 53, some traders will sell, taking a chance that this is the start of the bear trend resuming because the bulls have had a couple chances to go up and it doesn't seem to be working. So maybe the bears will try now. It's a bit disappointing that we have this tail on the bottom on 53, but it's still reasonable to sell below. I don't know, maybe we get back to the 36 low. Maybe we get to a new low of the day. 54, follow through for the bears, consecutive bear bars closing near their lows, but tails on 53 and 54. 55, more follow through for the bears. Again, I do think we're going probably at least a little bit lower after three straight bear bars, but there are tails on all three of these bars, which could be leading to some sort of wedge on a lower time frame. 55 or 56, bulls are hoping, basically some sort of trend line break here and then a higher low major trend reversal, but they're going to need to do more if they want to get a credible higher low major trend reversal. And 50, 56 is not worth it. It's a minor reversal after three straight bear bars. You're going to get a second leg sideways to down. 57 could be the second leg sideways to down, but it's a good enough bar that I think we're probably, we might have to go a little bit lower. 58, you can see it tested back to the bar 56 low. So, bulls who bought below 56 and scaled in lower made money. So limit order bulls are making money in this bear trend. So that's a problem. And you can see no one's really willing to sell to close at 58. So it's basically a doji bar towards the bottom of the trading range. So traders buy back shorts and that causes 59. A big bull bar tests back to the bar 56 close. And then 60, a bear bar closing near its low. Can you sell? Yeah. But, I don't know. I don't really want to sell this low in the trading range. The risk is relatively big. We've had three attempts down, 55, 57, 60. So big bar, big risk, and the big bear bars are not getting good follow through today. See, again, big bear bar does not get good follow through on 61. Possibly trying a lower low major trend reversal, but I think disappointing again on 62. So bulls wanted 61 to close on its high and probably get a little bit bigger, and that would have been a credible reversal. Instead, it closed as a doji bar. Nobody wants to buy a doji bar, so traders will exit, and that's what's causing 62 to be such a big bar closing near its low. Are you selling below 62? I don't know. I probably wouldn't. You can see that we have a couple straight bars here and a breakout below the channel line. So it's probably not a very high probability sell below 62. I would rather just wait. And you can see it doesn't trigger on 63. So to me, this is, yes, it's a tight bear channel down, but it's really hard to get in on this sort of channel and it keeps reversing up. So it's really going to be hard to stay short even if you do get short. 64, a bear bar closing near its low, but probably buyers below 63, and then a big reversal up 65. I thought lower low major trend reversal, but it is still overall a reasonably decent bear day. But I thought there was a reasonable enough chance that we were going to get a bounce because of how strong all these bull bars have been. So I was expecting a bounce to somewhere up in here. 66, it's follow through for the bulls. You know that the channel down was relatively tight, so we don't necessarily need huge follow through for the bulls immediately, but you want 67 to be some sort of bull bar. And 67 being a bear bar closing near its low, to me, means we might get one more leg down. When the channel down is this tight, we might have to get one more leg down before we get a reversal up. So it's okay to exit below 67. Disappointing follow through 68 for the Bears. They wanted a bigger bar, but it's still follow through, and we're still in a tight bear channel, so it's still okay to be short. And then we get a really climactic exhaustive bar 69, breaking far below the channel line. Probably some sort of reversal up pretty soon. It's pretty unlikely that we're going to just keep getting big bear follow through here. And you can see disappointing inside bar, low one short for the Bears on 70, but no one wants to sell below a bull bar this late. And once you saw this much exhaustion, so there's probably buyers below here. Disappointment 71, because obviously there's probably going to be buyers below here within a couple of bars. So 72, big reversal up. 72 is a credible buy. You know that 65 was a credible buy. So the bulls who bought above here and are scaling in lower, 60% chance we get back to the bar 65 low, or sorry, bar 65 high. Disappointing follow through 73 in a doji bar, but it's still bull follow through, so it's okay. And then a huge bull bar 74, traded back up to the bar 65 close. And this is really climactic. And if you bought above 72, you have 20 points. So a lot of the bulls will start to look to exit up here. But what's really causing 77, I think, is we have two pauses, right? So 1 pause, 2 pause, 3. So really climactic bar and the third push up. So I think it makes sense to exit. As 76 is rallying. I think if you buy above here, going for 20 points makes plenty of sense, and you get out somewhere in here. Also, spike here, and then this is the start of the channel, the bar 56 high, so you could exit maybe the bar 56 high, something like that, around 20 points. But you can't just hold and just kind of basically exit down here. That's really not worth doing. But probably buyers below 70, 76 in a second leg up, which ended up getting up here on bar 3 the next day. For stop orders, 6, 7, and 8 probably okay. 6 and 8 probably better. I don't like to buy above bars like 7. You could sell 12 for a possible high of the day. The bulls want it to be a two-legged correction from 6, 7, and 8, but it is still a lower high double top. So, and a failed breakout above the trading range. So you could definitely take it and bet we at least get back to the 5 high or back to the low of the day in general. So reasonable to do that. Sell the close. Hard to take these, I think. And then a reversal up 16, only if you're taking it for a scalp to here, I think. But I don't know. I thought it would be better if it was an inside bar. Not worth doing anything. And then 18, low one short, you could bet on a second leg down so spike, pull back, and then you're betting on a second leg down. It's probably reasonable. And then sell the close 20, just taking a chance. We basically don't get a bull reversal bar here, and we get a breakout below the low of the day. I think if you're selling below 20, it's important that 21 closes below the 16 low. And then sell the close 21, a strong breakout below the low. These are all sell the close, but the bodies are shrinking. Low one short, maybe okay. I probably wouldn't do anything here. And you could buy 38 or 37, 38. I probably would not exit below that. Maybe you could buy 42, taking a chance we race up to here, but I would just get up below 43. And I wouldn't buy 45. I think, if we were going to go, we might have already started to rally, and I'm not sure the risk reward is worth it anymore. So I think this is final flag, and you could sell below 53, get follow through 54. But tough to take these shorts, I think, when you keep getting bad follow through and big reversals up. Reasonable to buy, but you get out below 67, I think. And then you can buy again 72. Oops. And then, we could, like I said, just try not to lose a whole bunch at the end. You can't really get out below 77. You wouldn't even be triggered. Yeah, well, I already, gave my analysis on Fridays on the daily and weekly charts. So that's the video.